Hello, and welcome to the stock specific class here for Thursday, October the 7th. Finally got a follow through day. One of the things that I was talking about in the last update was that, we were just getting these back and forth moves. We weren't getting consecutive days in a direction, whether it was up or down. But now, we've got a second day in a row where we've moved higher. Obviously, the reasons that people are saying behind it was the debt ceiling being pushed till early December. The funny thing about that is, and I think I mentioned this before, is that every time the debt ceiling comes up, it gets resolved. But the market, it always comes down to the very last minute, and the market starts kind of freaking out a little bit, and then it gets resolved. And so it's like I don't think anyone was overly concerned about something, and it is not resolved yet. Let me point that out. It's just pushed to another couple months down the road, which means that we're going to go through this whole same thing again, which is another reason to be very cautious on the rally. And I'm going to point out some things when we look at the charts that we need to pay attention to. I think, obviously we're going to have conditions in the market that aren't ideal at times, and you still need to trade. Obviously, you don't want to trade in a market that's really, really uncertain, where you can't really tell where it's going, like I was on Tuesday. But if it looks like the market could rally for a few weeks or so, or a couple months or so, even though it may still be acting like it's near a top or at a top, we can still trade that. But it's one of those things where you're going to be cautious, and we might use tighter stops on some of our trades, take quicker profits, those types of things to kind of deal with that. Let me jump in and start looking at what I'm talking about. But before I do that, again, with the momentum is we're definitely not in an overbought state. So we're definitely in a situation where the market's pulled back, and we can look to enter into some trades on the long side. Breadth has moved up to trending, which is a good sign that breadth. I'm really glad to see breadth moving ahead of momentum, because that tells me there's some participation in this rally. There's a lot of stocks that are moving up today, which is a good sign. Again, the thing that concerned me on Tuesday I was talking about is we never really backed off of that high sentiment during the sell-off. So that's a reason to be cautious on the rally. And especially if we start to rally and this shoots right to the extreme area again, which it likely will. It's going to be a sign that we're getting very near a top, and something I've talked about for several months. We thought it would happen a little bit earlier, but if these indicators all start to shoot to extremes, then we know we got the big top, and that's when we'll start to get very defensive and very cautious when that happens, if it happens. But I would expect it to if the market breaks out to new highs from here, because the natural sentiment then would be that this market is, with all that's been going on over the last few months, this market is bulletproof. There's no way it's ever going to go down. Buyers will get overly confident, and that's when you'd have to expect that bigger correction. Now, there are a couple of trades I'm going to add to the portfolio today. I do understand the buy-sell ratios are under 1, but I think we're going to be up pretty close to 1 after today's move, because of the fact there's so much participation in this rally today. I don't think we'll quite get there, and I don't know. It'll get close enough where I think we'll be okay to add some things today. Now, again, this is something that will happen over time with these indicators. You've seen me probably do it a few times where I'm like, you know what, this is going to show up tomorrow. This is gonna move tomorrow. I've looked at these indicators so often that, and I know that they update overnight, that I can kind of anticipate some of this stuff. So if obviously not all of you, especially if you're just starting out, you're not able to do that. That's fine. Wait until it does actually show up at about 1 or higher to start increasing your new buys. And it doesn't mean that you can't buy anything when it's below 1. It's just you don't want to be loading up in that situation. We're not going to load up today. There's only a couple that I want to add to the portfolio. But over time, you'll start to do the same thing. You'll be able to anticipate some of these moves, and so anyway, so I think we'll be okay with that. So let's jump over to the charts here. And again, so we do have another update. Now I do want to see how we close today. Do we really fade off of that? I don't mind if we fade a little bit. We already gapped up to open the day, so it might be a little bit hard for the market to close at the highs of the day. But I don't want it to come all the way back down. If it comes all the way back down in this range right here, that would not look very good. It would not be a good close. I am still concerned with the way it behaved right through here. Again, typically when you have bottoms, they tend to be V-shaped bottoms. They tend to drop and then rally right off of that. But the difference here was that we got some of those. The sentiment dropped a little bit more on these, and there's a little bit more fear in some of these sell-offs that we're able to bounce pretty strongly on. We didn't get that here. We got a very sluggish back and forth. It is a reason to distrust the rally. Could it be that this is a false rally and that we had lower? Absolutely, we'll be watching for that. It has pulled back enough though to where you could see it move higher. Now, one thing I'm keeping a real close eye on is the chip stocks. This is a reason to be cautious on a rally that it may not move up too much further. Remember, I pointed this out on Tuesday that those stocks had gone to a lower low. You can already see that trend has kind of rolled over. Is it possible that they could break out and go to a new high? You should still see that, but because of this behavior is an early warning signal. It's a red flag that it's happened. And so what I try to do when I'm analyzing all this stuff is you just kind of tuck those things in the back of your memory, those little things to allow you to be cautious that if the market does rebound and start taking off again, and get close to breaking out to new highs, we get in that extreme reversal risk. Those chip stocks broke that trend, and then you start looking for other signals that could indicate a top and indicate we're about to roll over. A lot of times when this happens, you see a sluggish rally. So I don't know that I'd be jumping into a lot of chip stocks off of this, or stick with the strongest trending ones, which we typically do anyway if you're going to be trading is trade the stronger trends. But that's something to be aware of and keep an eye on. The Dow chart, all the other charts are going to look about the same. Again, nice rally day in the Dow. But here again, this had that deep pullback, went to a lower low here on the Dow. So that's also kind of a warning sign right there, that we'll kind of be aware of. And again, these are all reasons why on newer trades right now, I'm probably going to use a little bit tighter stops. I'll continue to add if the trend continues high. I'll continue to add to the portfolio, but if it starts to roll over again, I'll resist adding to it. I don't want to be loading up. QQQ, again, you could point to this breaking lower here, had higher highs, higher lows all through here. Russell 2000. Now the Russell, we're just going to be focused on that long-term sideways range. We're right in the middle of it. Do we break out to a new all-time? It was the only index that didn't break out to new all-time highs that the last time the rest of the market did. We'll keep an eye on these lows down here. If those lows get broken, that's really going to be bearish, warning sign there. All right, I'm not going to go through all the other charts here, but I just wanted to kind of go over the market conditions before we start looking at individual stocks. So let's look at some individual stocks, being that this is the stock specific class, and then we'll manage a portfolio. By the way, there were some things that I probably should have done yesterday in the portfolio. I didn't. I was busy at the market close and didn't have a chance to do that. And actually, it probably worked out in our favor. There was a stock I needed to stop out of that rallied a little bit today that we get a little bit better price getting out of. And then some of the ones that I might have taken profits on that I'll probably end up holding because they look like they're rebounding a little bit. Anyway, I'll go over that here in just a second. Let's go into our sectors here. Oil is still at the top of the list. Some of the oil stocks, though, are really stretched. I don't know I'd want to chase them right here, but there are a few that still look pretty good. One of those is Transocean. I like. RIG is the ticker symbol, 96 strength rank. We're getting these higher highs, higher lows through here. It's pulled back a little bit over the last couple of days. Was it a buy? Pull back to a hold. We will probably wait to see if that can go back to a buy. So that's one that I'll go ahead and we'll go ahead and add to the watch list. And I'll put the alert on it too while we're at it. And then I also went in, and I talked about this before. You can click this little plus button right here, and it'll show you individual sectors within that larger sector. And in this case, I was looking under refining and marketing right here, under the hold section, and was looking at TELL right here, 94 strength rank. So we're coming down the strength rank list a little bit. But with the way the market's pulled back, you're going to probably have, well, a lot of the higher strength ranks we've either already have on the watch list or we're trading them or something like that. So again, as long as you're still in the around the mid 90s, you're usually still okay. Obviously, if you have better patterns with higher strength, the higher strength rank, you prefer to trade those. But we just want to avoid dipping down too far. What I like about this is you got this big pullback right here, have a run up, and then you got what looks like a bullish ABC pattern right here. It's retraced about half of that move up. So that's a good sign too. This is an area where you might expect it to start to go back up. Now, who knows? This thing could still be falling, but since we're waiting for it to go back to a buy signal, we're waiting for that confirmation. If this thing did move back up to a buy signal from here, then it would probably be a good entry point and good confirmation. we can look at a little bit of a longer term chart on this. So again, you had this big move up, a big deep pullback, big rally up, big pullback. What you're hoping for right here is that it's similar to right in here where it started to move up, pulled back, and then had that big explosive move. Back here, it moved up, pulled back, had that big explosive move. We're hoping to capture the same thing here. All right, so let's put this one in. Put our alert on it. And under finance, right here, I was looking at this Lending Club Corp, LC, 96 strength rank. Now it's gone to a buy signal today. I don't really want to buy it yet. Well, the reason is because again, I don't want to be loading up in the portfolio. Now again, this is a stock specific class. It doesn't mean that I'm going to be trading everything that I'll go over, but if other people are looking for trades, that's why you're here. It looks like a pretty good pattern. You got a nice little pullback right here, and then it's starting to move back up again. There is a little bit of concern, though. You have to be a little bit concerned that maybe this is because we didn't have much of a back and forth on this drop. Could that be wave A, and this is wave B, and wave? Is this a bearish ABC pattern for that wave B? A smaller wave A, a lowercase wave A, wave B, wave C, and that completes wave B, and then you get one more move down for wave C. That's always a possibility in this case. But you could just manage it by putting a stop down below here. If it does take off and go higher, great. If it comes back down and goes below here, you stop out. But this was we have a pullback. This pullback with the market. Now the market looks like it could move a little bit higher here. This is probably going to move along with the market. If this is a false rally in the market, we're going to have the same problem with any other trades we get into today. They could come back down, we get stopped out. That's always the risk you take. But that's one that looks pretty good. And then under industrial products, we already have Alcoa in our watch list. But I like this ARC, 92 strength rank. So we're getting down on a little bit the lower end there. But this is one of those sectors that has a little bit lower strength ranks for some of the stocks that are in the list there. And you can see probably why I threw this one in the list. Looks like a pretty distinct ABC pattern right here on the pullback. So you had this. Let's go back a little bit here. So we had this explosive move here. Looks like wave A, wave B, wave C. Explosive move here. This looks like wave A, wave B, wave C. It's a deeper pullback, deeper retracement. Well, I guess depending on if you're including this as a swing, this was a swing low that I would use for the retracement. So if you measured that Fibonacci retracement, actually that's right at about 50%. So, but if you're going off of this closing area right here, that's a deeper pullback. We're waiting for it to go back to a buy signal anyway, so we'd want to wait for that confirmation. So let's go ahead and put this one in the watch list. We'll put that alert on it. And then there's a couple I like in the business services sector. One is Marathon Digital, MARA. This is kind of a Bitcoin trade. Same with Riot. These two. I don't really like the chart of Riot though right now. So this one has been outperforming. We've traded both these before in the portfolio, but it looks like it's had a little bit of a deeper pullback here as Bitcoin pulled back. It's been moving up. So yeah, so it's kind of stair-stepping up. This pullback is probably similar to this one back in here. I'd still wait for that to get to a buy signal to give us a little bit more confirmation. This is one I want to add to the list. See if we can get back into this one again. And the last one, same in that business services sector. And it's this MRIN, Marin Software, 97 strength rank. Now this one has had a tendency to kind of move sideways through here. Something woke it up right here, exploded, but it came all the way back down. It's starting to kind of form this bowl-shaped move. But it's pulled back from that. I want to wait for this to go back to a buy signal. The nice thing about these again is that you got a little bit of a sign of an uptrend beginning, higher highs, higher lows. This is a slightly higher low right here. This could be a higher low if we start to move up from there. And then you've got the potential of it having been up here before. If this is going to trend back up again, it should get back up in that area again as long as the trend is there. And this is one that you get if you do get that buy signal. You could use a tight stop on this low right here, because if it broke below that low, you'd probably want to be out, and so you wouldn't be risking very much either. So there's a lot to like on that chart if we get that confirmation. Let's go ahead and add that one in. All right, so that covers the new stocks. Let's do a little bit of portfolio management here. We're still down a little bit, but again, the amount we're down about 3,000. Considering how big the pullback was in the market, this is not bad. I thought we managed it pretty well during that pullback. And if we can add some new positions here, and if the market starts trending back up again, we should be right back to positive and then some pretty quickly. Let's go through the stocks we're in right now. SDKS, it had a nice move up yesterday. A little bit of a bearish kind of candle right here. We are at the extreme reversal risk, but we also have a market that's just starting to kind of rally. And this is not, it mostly hit that extreme because it had a pretty big day. So that was a pretty big percentage move. This is a lower price stock. So it kicked it into that overbought range pretty quickly. But the chart doesn't look overbought as far as, do I think it could still reach higher highs, higher lows? Can't remember where our stop is on this. If it's down in here, we could move it up to this area right here. Let me just write that number down, and then when we look at where that stop is, I could change it. This low right here would be $10.45. So let me jot that down. I'll come back to that though to see if we need to make that adjustment. The one I needed to stop out of, let's go to, was HOV, the next one here. Had that big drop. We were close, but it looked like it was holding that level there. And this is just the risk that'll happen from time to time. What you hope for is that it breaks below your stop and doesn't go much below it. You know, this one shot all the way down. Now it did rebound a little bit today, so we're not getting out at the lows of the day, but we still need to stop out of this one. That chart does not look good. So I'm going to be getting out of HOV. GDYN still looks fine. SBOW, now this is one that I mentioned I might get out of. It was already in the extreme reversal risk range and near the right side of that extreme reversal risk. It had a pretty big move up right here. I thought we could maybe get out if it closed below the low of the previous day, which it did do yesterday. But like I said, I wasn't able to do anything at the end of the market yesterday. But I think that's a good thing in this case because it had a nice little bullish reversal candle today. It's backed off of that that extreme. It's not the far right side of that, and you have a market that could rally a little bit here. So what I'm going to do on this is, if we'll keep an eye on it, but if it can rally up another day right here, then we can move a stop right below that low, and we'll just move our stop up. Have kind of a trailing stop right there. So I think that's what I'll go ahead and do on that one. Same, I think, with ASPN. It closed below the low of the previous day, although that wasn't really as stretched. It didn't have as sharp, you know, this is a sharp move right here. The slope of that trend is not that bad. What we could do, and maybe let's go ahead and do that today. Let's go ahead and put a stop right below here. So we'll just tighten that stop right up. Because if we're going to be rallying, right, it should be rallying right here. We shouldn't have this thing go back down. And if it does, we probably want to be stopped out. And we'll see if that does, if that new stop area actually is above where we entered. Let me find out where that is here. The low of that was $45.38. So we'll put a $45.36. I think that'll be good. And then SH, this was the hedge. And actually what happened on this, I mentioned on Tuesday that I might get out of this. I think I mentioned on Tuesday because it looked like it was going to close below, where's Tuesday? Right here, yeah. It looked like it was going to close below the low of the previous day. But remember, the market faded. It pulled back into the close right there, and then we had it looked like at that point it looked like it could sell off again. So I actually got out of it, but then when right before the market closed, it looked like it was going to fade. So I put it back on again. Now in hindsight, obviously it worked against us here because it dropped down, meaning the market went higher. Remember, this is the trade that's opposite of the S&P 500. That's okay. I was good with that because of the way that chart was looking and the fact that we hadn't had a sell-off that spooked the traders a little bit. If it would have dropped, it would have dropped a lot sharper, and we would have had a big spike in the SH, and it would have been a good hedge against where we're at. Again, we're not down very much in the portfolio, so I don't mind stopping out right now because other trades we're getting into will make that up pretty quick. So, but we're going to go ahead and stop out of SH. All right, so let's go ahead and do all that. Let's go to the portfolio here. Okay, so STKS, we're going to adjust the stop price to $10.45. So we're moving it up. Now at $10.45, it's still a little bit below where we got in. We got in at 10.58, but that's all right. It'll basically mean it'll be a break-even trade if we get stopped out. HOV we're getting out of. It's currently at 82. I don't know if that price. Let's see if that price is right. 83, 82. So let's sell 60 shares at 83, 82. So it moved up a little bit from where it closed yesterday, so we're good there. But we did take a little bit of a hit right there. It's all right though. Sell that. And then on ASPN, we're going to adjust the stop up to 45.36. So that'll be a little bit above where we got in. So that's good. That means we're locking in the gains on that. Oh, yeah, ASPN 45.36. And I'll adjust the stop on SBOW, but I want it to rally up from today's move a little bit, and then we'll put it down below the recent low on that. And then we're stopping out of SH at currently at 14.84. So sell that, 600 shares, 14.84. We only lost 114 bucks, so that was not a problem at all. All right, let's sell that. All right, what are we adding? Let's go to our watch list. I mean, look at we have so much cash now available. But again, the conditions are still not. We want to go crazy here because of the fact that we want that buy sell ratio to get above 1, the buy sell ratio of the overall market to get above 1. Go to our watch list. Let's go through the list a little bit here. Again, I'm keeping this one in because it's, we haven't broken that triangle yet. We go either way. Let's switch this to watch list and stock specific class here. SGOC, man, this one's kind of flat land. I think I'm going to boot that one out. Yeah, I mean, it'll show up. If it starts taking off, it'll show up again and we can consider it. But I just don't like, I like to see movement. That thing's just going sideways. KOPN, again, this one's kind of bouncing off of had kind of a double bottom right here. So as long as it doesn't break that, and I think I said this the last time we went through the list there, we were watching to see if it would break below that. It hasn't. If it can start to move back up again, that might be a decent pattern there if the market starts going higher. So I'll keep that in there to keep an eye on it. Now I missed this one, TGLS. I'm not going to chase it here. If I would have seen that at the market close yesterday, remember I didn't do anything at the market close yesterday, or I haven't had other stuff going on that I couldn't get to this. But yeah, I don't want to chase that move right there. And look at that move, put it right to the extreme reversal risk. Here you're right at the breakout area. Chances are this thing pulls back a little bit. And if it does, it kind of pulls back, a little bit of a corrective type pattern there. And yeah, we might revisit that. So I'll leave this in the watch list for now in case it does pull back, but I don't want to chase that thing. KDNY, we'll keep this one in for now. TTI is one that I'll probably be getting in, not now, but I'll probably be getting to. We talked about this one before. It looks like an inverse head and shoulders pattern. We'll put the alert back on this one to let us know when it goes back to a buy signal. I'd like to see this. I'd really like to see it go back to a buy signal and break out right there. But this is one I've been kind of waiting to get into. This is in the oil sector as well. So we'll keep that one in. GameStop, we'll keep that one in for now. DAC, again, I don't like, what I was hoping for here is that if this was wave A, wave B, wave C, you get the sharp move down, and then we get a real sharp move up. Along this kind of move like what the market did, it looks a little bit choppy through here. This is a little bit of a bearish day candle. I'll keep it in for now, but it would need to start really taking off, and we'd be waiting for this to go back to a buy signal anyway, and it'll be a little bit before it gets back to a buy signal, but I'll keep it in for now. EDRY, that one still looks okay. I know it's gone to a sell signal today, but the overall pattern still looks like it can work. This is one I'll probably get into today. IK and X. It triggered buy signal recently, but again, you got this kind of a bowl-shaped move right here. It should at least work its way back up to this breakout area, and then hopefully it can break out this time. We'll put our stop right below here. Right about 26. Alcoa, I told you this one had pulled back. So we had that move right there, and remember, I didn't want to get into it right there. I didn't want to chase it right there, and this ended up being a good thing. See, so I missed out on that. I can't remember what that other one was we just looked at. I missed out on that one. Again, don't worry about it. Sometimes when you decide to wait or what have you, it can end up being a good thing. You got to try to remember when the times you were patient and waited and it was the right decision. Remember those, because otherwise you only remember the times where you missed it, and you think that you start to think that you never get it right. Well, no, it's just that you're not paying attention to the times when you did get it right and it wasn't a good decision, and it really does balance out, and that helps when you understand that. It helps with your patience level. That it's okay. It's okay to miss a move. It's okay to have a stock like HOV blow past your stop loss point. It's okay to have that happen. If you're managing everything right, it should be boring. It should be. You shouldn't have extreme emotions. And if you're managing your risk right, you're not going to freak out that you missed a move. You're not going to freak out if you have a stop or a loss. Trading should be boring, and that's what I'm trying to teach you through this process, is that you want to get it down to these levels to where it's not a casino game where you're getting ecstatic when it works for you and you're getting depressed when it doesn't. Believe me, if you're trading like that, this market will ruin your life. It will wreck your mental health. I've seen it happen to friends. I've seen it happen to people I've coached. If you can't get this down to where you manage your emotions, you should get out of the game. You should go do something else, because it can ruin a whole big area of your life. If you get yourself on that emotional roller coaster that most people do, and you got to avoid that. Okay. So it came back down here. Now, again, it really is looking corrective. We had this big run up here, and now it really looks corrective. That was one of the reasons why I avoided getting into this, was because it had this sharp pullback and then it went right back up to the breakout area. usually a correction is going to be more choppy. And so now it looks more choppy and sideways through here. So I think a much better entry point would be if this can go back to a buy signal. So we'll throw that, if that alert has already been triggered, we'll put it back in again. So I wouldn't mind getting back into that if it can go back to a buy signal from there. SENS, we'll keep that one in. Tesla, I'm going to get into today. I just like this kind of corrective behavior here. Now I'm going to have a pretty tight stop. I'm going to put the stop right below here. Because again, if the market's going up from here, Tesla should go up from here. And if it doesn't, I want a tight stop to get out of that thing. ORNT, now this has gone back to a buy signal. I don't want to get into more than 2 trades today though. So I'm going to wait on that one. This is kind of similar to where it wasn't real choppy on the pullback right here. That's a nice looking day today. I mean, that's a nice candle today, but I'm just a little bit concerned that, that might have kind of the same thing that happened with Alcoa. So we'll wait on that one. It won't be a big deal if we miss it. Believe me, if this market starts rallying, we're going to have a whole bunch of new patterns to consider for trades. There's going to be and so why run out of cash when there could be a lot better patterns coming up? This is looking pretty good. I like that corrective pullback right here. So we can wait for that one to go back to a buy signal. Keep that one on the watch list. ASAN. I like the stock. This one I'm still a little bit concerned about too. With the pullback wasn't real choppy right here, but we don't have to make a decision on that. It's not at a buy signal yet. But and then IRIX. This is the one we added today, right? Oh no, this one's been in. Oh, this is one of my notes here. This is one that we can wait on because even though it's gone back to a buy signal, it could be a better buy if it breaks out. But this looks like you have kind of that inverse head and shoulders pattern look to it. This would be really nice to buy on a breakout. So I think we're still okay on that one. LXRX kind of missed that one, move a little bit there, but I'll keep that in case it gives us another entry point. And then RIG, these are the new ones we added today, so I'm not going to go through those. Let's go back to IKNX. We're going to add this to the portfolio. So again, I'm going to put my stop right down here at 26, right below this low right here. So stops at 26. Okay, 100 shares would put our risk at 0.5%. We want to put about 1%, so about 200 shares. Probably do a little bit more than that. Let's do 250. Okay, that looks good. All right, let's go ahead and purchase. And then Tesla. I'm going to put the stop right below here, which was at 762. $762. Number of shares. Let's try 6. We can probably bump that up. Yeah, we can bump that up a lot. Let's do 20. Ooh. Okay, here's the problem. Again, we've got to be aware, even though the risk is, we have a really tight stop, but we'd be putting, if I did 20 shares, we'd be having 15,000. I want a number, we don't want to have more than 10,000 in a trade. So what would 15 shares look like? I'm going to go ahead. That's close to 10,000. Our risk is very small, not even 0.5%. So I think I'll go with that. I think we're okay with that for now. Let's go ahead and purchase. All right, that's pretty much it. I do need to add those alerts back on the watch list. I'll do that though after class. That's all I have. We'll see how things go from here. Who knows? This could be a little false rally in the market. We're changing our tune next week, but I feel a lot better getting into something today than I did on Tuesday. That's for sure. And today's class is probably a little bit more interesting than it was on Tuesday. All right, thanks, everyone. Have a great weekend, and we'll see you next Tuesday for the market update. Bye now.